Welcome back to another Trade Journal video. This is Trade Journal number 13. I'm going to start off by talking about my trade from this past week, and then I'll jump into the trade that I have going on for next week. So this past week, I was trading Peloton, and I had a covered call on the stock. So what that is basically I had 100 shares of Peloton at 130.91, which you can see here by the blue line. And I bought this maybe 2 weeks ago. And basically with the covered call, you own 100 shares of the stock, and then you sell a call option higher than that price to collect premium against it. And this past week, I had sold a call option at 131 for a max profit of $535. I ended up closing out that trade for $532. So I sold that on October 16th, which was last Friday, and then I closed it out this Friday. And as you can see, Peloton kind of stayed around that price and then dropped below. And I believe this big drop was kind of because of a downgrade by Goldman Sachs. So what happens in this scenario is because the stock price is finished below my call option that I was selling, I got to keep pretty much all of the premium from that call option, which in this case was $532. On the flip side, because I own 100 shares at 130.91, I do have some losses because the overall stock price is lower. So as you can see here, the stock price is around 122.66. And from this, I am down about $830 on the stock. However, because I own 100 shares, I'm going to continue to sell options against it. And that kind of takes me into my trade for this next week. I have sold another option contract at 131 for next Friday. So what that means is it'll expire next Friday, and I sold that contract for a max profit of $159. So next week's contract is definitely making me a lot less money than this week's contract because the price is so much lower than where I am selling that contract. Like the current price at 122, significantly further away from 131. However, I think Peloton has some upside, and it has earnings coming up on November 5th. So with that in play, I continue to sell the options contracts higher than my stock price to continue to collect premium. In addition to that, like over the last 2 weeks, I've been selling call options, which have totaled up to about $800 in profit, which is kind of equal to the loss that I have on the stock. So even if I had closed out this position right now, it would be break even because of the premium I've been collecting from selling the option contracts. Overall, when you have a covered call, you want the price to stay somewhat close to where you bought the stock at or above where you sold the call option so that you can kind of get those shares taken away and assigned from you. But at the end of the day, I kind of do the covered calls to collect premium while still owning the stock and taking advantage of that upside as well. If you have any comments or questions, feel free to leave those down below. Let me know what kinds of trades you guys are taking. And until next week, feel free to like and subscribe to stay up to date with any new trades that come out.